Welcome to another episode of Made in Banglatown, and I'm here with some financial moguls right now. So this episode is actually very serious. Why is it serious? Because we're talking about money. We, as Bangladeshis, we don't really take money as serious as we take other things like education, titles, but taxes are coming up. Taxes are not just paperwork. This is like your financial report card. And right now, this is the perfect time to get your finances in order. If you don't know how to get your finances ordered, no problem. I got the guy here. Right now, I have Mustaque Choudhury. He is an enrollment agent. He does immigration services. He does tax services. He's just an all-around financial guru that has been helping our community develop their finances the right way. Mustaque, how you doing, man?
I'm good, brother. Thank you for the kind introduction.
Absolutely. It's nice to meet you. I'm glad to have you on our podcast. And to my left, I have another mogul. That boy does commercial real estate right now. He's the COO of Menace Media. He does business development. And he's just all around like a swole bro. Welcome, Ajay. What's up, man?
Thanks for having me, Mr.
Yes,
MIB.
Yeah, so you know what? This is huge, right? All Bengalis, all in finance, and we're figuring out the best way to set you up for financial success. All right, you know what? Let's dive into it, you know? I have no idea who you are, sir. Tell us a little bit about yourself. Who are you? Why taxes? Why finances? Where are you from?
Sure.
Let the people know.
Sure. You already mentioned my name is Mustaque Choudhury. I've been doing it for the last 17 years.
Wow.
And I'm an IRS central agent. I'm also with American Bar as a member, so any type of tax immigration, I can handle it in all 50 states. And the reason I'm here in Michigan, because what I've been observing for the last 6-7 months of being in Michigan, that we have a huge diverse market, whether it's South Asians or Yemeni, Arab community. People are not getting the service they're supposed to. Let's say, for example, when it comes to taxes, when it comes to a situation that people think like it's a tax season, we gather some of the papers, we just drop it to someone's office, whether it's from the garage or from the basement, get it done, we're done with our taxes, one less headache to do. But they don't realize that, as you said, it's your report card.
Yeah.
It's not just a report card for what you did last year, it's gonna be a future report card, what you can do out of it.
Yeah, that's very
Whether
true.
you wanna buy when you wanna buy a property, like you talk about, he's in real estate. He needs the report card. He needs the tax return that's gonna show that if I'm eligible to buy a property, whether it's a single family, if I'm gonna go for 2-family, 3-family commercial property, you need that. So that's why people don't tend to take it seriously. They're like, oh, we just get it done, get the W-2, file it, whether I get a refund or not, that's a done deal. And immigration, that's just a horror story over here.
Yeah, that's absolutely correct. You know what? Why do you think our people, right? Why do you think Bangladeshis coming from Bangladesh as immigrants, they don't take taxes as serious? They just, look at it as something like, oh, it's just something to do. The time is now. I just got to do it after that. I don't want to have to worry about it. Why do you think we're like this?
It might not come out the way it's supposed to, but it comes through education. Why? Because if you look back home or even over here, we don't have any curriculum that talks about finance or that talks about managing your money. If you don't know the basic of managing your asset or managing your money, you don't know how to do taxes because tax is just foreign to you. I have clients that make $200,000-$300,000, have no idea how to avoid taxes, how to lower the taxes.
Wow.
But they're all educated because just because you're good in one thing doesn't mean you're necessarily good on the other. Like, for example, if you talk to me about commercial, I have no idea. I know about the real estate. I know about how to work on the taxes, but the commercial property, you're an expert on that.
Yeah.
But I need to know exactly what I'm going to ask. If I don't know the question, what am I good?
I love that you said that, at the end of the day, we can't take care of everything ourselves.
Correct.
People have specialties in certain fields.
Correct.
So now you are an expert in your field of taxes. So you said you're an
Enrolled agent.
enrolled agent.
Correct.
So tell us, what is the difference between that and a CPA or my uncle that does taxes at his home?
Okay. When it comes to a tax preparer, in order to be a tax preparer, you literally don't need to have a college degree. You could just go to any of the school, get a 2 months of training, you get your certification, get your PTN number, and you can start doing your taxes.
Okay.
Okay, you could literally work out of a garage, from basement, from anywhere you want to work.
I see.
They're the one who's just doing your taxes. And the way you differentiate a tax preparer to a CPA and enroll agent, if you look into the second page of the 1040 of your any tax return, most of the time you will not see a tax preparer name at the bottom where it says paid preparer. Why? Because the reason they don't put their name, they cannot represent you in front of IRS. Plus, there's also a question on the second page. It says third-party designation, which means that if IRS have any question, can they get in touch with you? They'll always say no, because obviously if I'm not licensed, it cannot represent you what I'm gonna respond in your taxes. And it might sound bad, but you're doing it for 40, 50 bucks, you're getting it done. And their office, you'll see crowded with people, midnight, even till 12, 1 o'clock, you have a line coming in for doing taxes. Wow. Now let's talk about the CPA. CPAs are the licensed public accountant. They're the one who can do your taxes. They're the one who can do audits. If you get audited from the federal or from the state, in the state they're the licensed, yes, they can represent you. In US currently, as of today, there's 680,000 CPAs. That's a lot of CPAs. That's why when you see in billboards or any sign, it could like down the block, you will see a CPA office. Okay. But the CPAs are licensed for that state only. If you're a person who moved from one state to another, or you have multiple businesses in multiple states, you are not okay with the CPA because that CPA will be able to work in that jurisdiction of he or she's licensed in.
So you would need multiple CPAs.
You need multiple, correct. Now, when it comes to an enrolled agent, it is not a state license, it's a federal license.
Oh, okay.
As of today, we have only 68,000.
In the entire US?
In the entire US.
Wow. Okay.
Out of 340 million population.
Yeah.
That's 0.0102%.
Yeah. It's a small number.
Very small number.
Yeah.
And the way you differentiate us from others, we don't have any state jurisdiction.
Okay.
We can have office in multiple states. I have ultimate rights to represent you for collections, appeals, audits.
Wow.
Not just we do your tax filing, your tax planning, tax strategy, tax implementation.
Wow.
That's how the tax gets done.
Yeah.
You just file it. When it comes to tax filing, it's already being done. It's after the fact.
Yeah.
The year is over. You're just reporting what happened last year. That's it. But the tax situation, exactly the tax, happens throughout the year.
Yeah.
If you have a proper planning, regardless of any business that you're in, whether you're W-2 employee or you have your own business, whether it's a small business or you have a commercial property, or anything on that, it needs a planning throughout the year so you're not surprised at the end of the year what to expect. It's like when it comes to taking an exam. If you study throughout the year, you don't worry about taking an exam because you know what to expect.
Exactly.
Wow. But when it comes to like tax filing, at the end of the year or like starting this year, January 26th is going to be this tax.
January 26th, tax season officially starts.
Correct.
When does it end?
It ends on April 15th.
April 15th. January 26th
Monday,
to
January 26th.
April 15th.
Correct.
That is tax season. Okay.
And usually what happens is that people try to put together all the paperwork.
That's me.
And then we just rush into whoever is next to us.
And I just want you to file it.
And just get it over with.
Absolutely.
So what would you recommend to the regular person in terms of who you should trust to do your taxes? So you're saying that tax preparers don't need a lot of credentials or licensing.
No, you don't.
Then you have CPAs, then you have enrolled agents.
Correct.
So what's your recommendation in terms of like, should I work with a CPA or with an enrolled agent?
You can work with CPAs and an enrolled agent.
Okay.
You can work with both of them, depending on what's your need. If you're someone who just in one state, you don't have any properties or any investments or any type of business outside of state that you live in, you're okay with the CPA. I'll be very honest with you. You don't need an enrolled agent because the CPA can do an audit. Yes, he or she might not do the implementation or the tax strategy because most of the CPAs, they're old school. They just go by what they've learned in the books and they don't try to keep up with everything what's going on.
Oh, I see.
Because when it comes to taxes, it's an evolving market. It's an evolving strategy. Every year there's something new coming in.
Yeah.
If I tell my dad, what was your tax planning when you're in my age, it's not going to come handy. Think it this way: in late 1900s, they didn't have 401ks, they didn't have HSA, health savings account. They had pension, but now pension is like a dream to us. You don't have a pension. I don't have a pension.
Yeah.
But
It's all 401ks and IRAs.
It's all 401k and IRA, and even 401ks are getting limited. Most companies don't even offer 401k.
Yeah, that's actually true.
So it all depends. Every person's tax situation is different. So it varies from one person to another. It's not like one size fits all, that just because I look good in this suit, everyone should wear this suit. He looks
One
great
size
in this
doesn't
suit,
fit
but if
all.
I want to try this one, I'm going to look ugly because I'm not good looking like him.
Now, where an enrolled agent comes in, that's when you implement a strategy. That's
Correct.
something that really piqued my interest where, it's not about filing taxes.
Correct.
Anybody can file the tax.
Correct.
But what I think a lot of people want is to get ahead of their tax, to plan how to pay the least amount of taxes or how to set up their finances the best way. How do you help people with a tax strategy? What is that?
Sure. I'll start with the simple ones, and then gradually I'll take to the complex one because depending on the personal incomes and the situation, it varies. The few things that we always have in our fingertip, that's your IRA. Like we all heard about traditional IRAs. That's your retirement account. You don't need any employer. You can just go to any banks, Chase, Bank of America, any bank, or you go to, whether you have an account with Charles Schwab or Robinhood or TD Ameritrade, you go there, you open up an IRA. Whatever you put into a traditional IRA, that's before taxes.
Yep.
Which means you get a deduction for that specific year. That lowers your taxable income. The money goes into the account tax deferred, which means I'm deferring the taxes till the later day when I'm able to take it out.
Yes.
Now you might say, Mustaque, I deferred it. When do I take it out? I take it out at my retirement after age 59 and a half.
Yep.
That's when I'm gonna pay taxes in my future tax bracket. Because we don't know what your income is gonna be at retirement, what financial situation you're gonna be. So we're gonna figure it out at that point. By the time you and I, we get to a retirement, obviously we're expecting our incomes to go up.
Yeah.
As our income goes up, you don't wanna pay taxes in that tax bracket, you wanna get the money tax-free. So that's when the Roth IRA comes into play. Roth IRA, that's an after-tax account.
Okay.
I don't take the deduction now, I don't need the deduction.
Okay.
I'll let the money grow tax deferred,
Right.
but when I do take it out at retirement, it's completely tax-free. Let's say I start an account with 7,500, which is the limitation I could put in.
Yeah.
Every year I'm putting 7,500. By the time I'm retirement, with the growth of the market, let's say I have $10 million. Now I can walk out with 10 million, all tax-free.
Really?
On the other hand, the traditional IRA, I have same $10 million. You and I, we started IRA. You started the traditional, I started the Roth IRA.
Yeah.
I'm walking with 10 million tax-free, and from your 10 million, depending your tax bracket on that time, when you withdraw it,
Yeah, I got
you're gonna pay taxes.
Wow.
That's just a
All
simple strategy that anyone can do.
Yeah.
A simple W-2 employee can do that.
Yeah.
Now from your job, you get a 401k. Try to get a max of, use that.
Yeah.
Max out your 401k. That's reduce your income, dollar for dollar.
Yeah.
Those tax deferred will pay the taxes when it comes to retirement. Third thing you might get on your job, sometimes some advice from employer, it's called health savings account or HSA. That's your health savings account where you put the money pre-tax. Some cases you could do after tax as well. The money goes the tax deferred. As long as I use it for qualified medical expenses,
Yeah.
I get the money tax free.
Wow.
These are the three things or four things, traditional Roth, your 401k, HSA, anyone can do it.
Yeah.
Even with the simple W-2.
These are amazing products. You know what? I don't think a lot of our people from our community know about these things. And a lot of these products are at banks. Like bankers would be very important, right? So how do you work with bankers? Do you recommend your clients to also have a banker that they trust, that they work with to help with the overall finances and the tax strategy?
Good question. Everything that I spoke about, those four things, those are not product, those are the concept.
Oh, okay.
I can fund those concepts with any product I want.
I see.
You know what I'm saying? So let's say the traditional IRA that I spoke about.
Yeah.
I can fund it through a checking account. I can fund it with a savings account. I can fund it with a CD. I can fund it with the stocks. I can fund it anyway. Funding is not a problem. It's understanding the concept and does that make sense in my tax situation.
I see.
So you can do it with the banker, you can do it with your financial advisor, whoever you feel comfortable with. Funding, it's after the fact. Once I finalize the strategy, then I worry about funding. It's like when it comes to, what should I say, buying a property.
Yeah.
I need to know which property I want to buy. Once I have the approval, I can go to any banks and get the funding from that bank, but I need to find the house first.
Right. Yeah, that's true.
So that's why the concept needs to make sense. You like the traditional IRA, or you like the Roth, or you like the 401k, you get it from your job, you don't need it in a banker. All you do is just go to your HR, fill up the form, decide what percentage you want to contribute, and that's it. It's done deal. No bankers, no middle.
Yeah.
Traditional IRA, you go to any bank of your choice. Just tell them, I want to open up an IRA account. They'll go through some questionnaires, and you decide which one makes sense. Traditional, do I take a tax deduction now, or I get the money tax-free at my retirement, and now I decide how I want to fund it. Some people might say, you know what, I want to fund it, but I don't want to take an interest because we have people in our community who wants to stay away from interest. Then don't go into CD, don't go into savings account, do a checking, or go into the market with stocks or mutual funds, ETF.
Yeah. Wow.
So question, right? So a lot of these concepts are things that the regular everyday person can take advantage of if they do it properly via the methods that you've mentioned, right? So can you talk more about like funding an IRA? The understanding is that you have to pay taxes for your contribution up front, correct? So like if you said the limit was 7,500.
7,500, correct.
So if let's say someone takes 7,500 to a bank to fund an IRA, how much in taxes are they paying on that 7,500?
Good question. When I'm talking about after tax, that doesn't mean they're taking the tax out, that's coming out from your bank account. Let's say I get a paycheck, right? I work for a company, I get a paycheck, I already paid the taxes, the money hit into my bank account, that's already after tax. Now from that after tax account, I decided to go to his bank and I say, you know what, I want to open up a Roth, I'm going to contribute 7,500. Then tax 7,500, it's already being taxed. Now that's called after tax account. So I put that money, it's a $7,500 full contribution. The money goes tax deferred. I take out the money at retirement after 15 and a half, all tax free. And when it comes to before taxes, before tax means I'm putting the same 7,500, but doing my tax filing, we take it as an IRA contribution. So that reduces your taxable income. Say you made $100,000.
Yep.
You put $5,000 just to keep the numbers easy for you. I put $5,000 into traditional IRA. Now my taxable income is $95,000. So that's how it becomes a bit before tax or pre-tax.
Yeah.
Now
And
the
it's the
Roth
same
IRA,
thing with the HSA.
Same thing with an HSA.
Okay.
If you have a pre-tax, that lowers your taxable income. You can still get a tax deduction on your tax return. So when you said, okay, who do you work with? It all depends what we're trying to achieve out of it. If I need someone who's going to do my taxes, if I get audited, then yes, CPAs are fine. Because most of the CPAs don't go through strategies. They're just going to tell you, you know what, you got to put a little bit more taxes here or a little bit more. But we fail to address the situation, what's in our hand right now. How do we not do the same mistake? If you're making the same mistake over and over again, expecting our results are going to be different every year, and this year I didn't get a refund, hopefully next time I'm going to refund. I don't like working on if. In English word, there's one word that I like is the word if. I have control on my tax. I have control on my finance. Why do I have to say if, that if I did that? Take control of your finance, take control of your tax situation, learn a little bit of tax of what's going on. You don't go by what CPA says, what even enroll agent says. You just get an education, go online, do some readings, at least you have an understanding what we're talking about. That's why, remember I said, it's all about education. Us three, we cannot change the community, but one person at a time, that's how we change the community, that's how you change the state, that's how you change anyone out there.
Yeah. So then how do you deal with your clients? Do you take the educational approach with them, or is it more so, do you take the leadership approach and you say like, hey, here, I know this strategy is gonna work for you, follow it. How do you deal with your clients?
My client dealing, it's a two-step process. First, if you're a new client coming to us, and let's say you're just doing the tax filing, before we file, we need to review the entire tax return with you. You need to understand how your tax works. What is the basis of what's called standard deduction?
Yeah.
What's called itemized deduction. Why did I get more money on the child tax credit? What we talk about, the big beautiful bill that everyone talks about. What do I get out of it as a W-2?
I don't even know what that is, but yes, you're right.
Right?
You know, we should know.
Because I need to educate my client, regardless whether my existing client or a new client.
Yeah.
When you know your stuff through the conversation, or even when you're doing a coffee break, you can talk to your employee, you can talk to your friends, you can talk to your colleagues, like, look, this is how it works. That's how you're changing 1% at a time.
Yes.
And after the tax season, because it's already after the fact, as I said, now we're talking about what we need to do this year so you don't do the same mistake that you have done last year.
Absolutely, I love that. You know, to the audience here, if you got up to this point and you don't know what's going on, that's the point. That means that you're guessing when it comes to your taxes. And what Mr. Chowdhury is saying is, you know, we have to start getting ahead of our taxes, really understanding what we're putting on paper, where is our money going, where is it coming from. All of this is very important. You touched on something about deductions, right? Standard versus itemized deductions. What are those?
Standard deduction, that's a deduction that given to everyone, regardless of income. You don't need to prove anything. You don't need to give any explanation.
I see.
Depending on your filing status, whether you're single, whether you're married, filing jointly with your spouse, you're filing as head of household, everyone based on their filing status, they have a set deduction.
Okay.
And every year it goes up based on the inflation. Okay, that's a standard. That's why it's called standard deduction.
Okay.
When it comes to itemized deduction, that's when you get to itemize, you get to break the deduction and take advantage of everything what's out there. Remember I said the one big beautiful bill?
Yeah.
Few things that we don't know that's big in this one beautiful bill is the SALT taxes, which stands for state and local tax.
Oh,
Prior to one big beautiful bill, we had a limitation that the maximum we can take on state and local tax is only 10,000.
okay.
So if you're living in a state where property tax is high,
Yeah.
you're getting screwed because the only thing you can take is only 10,000. Could be you paid $30,000-$40,000 in property tax, but you can only claim 10,000 because that's what it
Really?
allows. But on one big beautiful bill, you can take up to $40,000 state and local tax deduction. That's
Really?
big. That just gave you $30,000 more deduction without doing anything. I'm still living in the same house, still paying the property, but I just gave
Yes.
myself $30,000 deduction automatically.
Yeah, I love that. I love
That's
that.
one.
I didn't know that.
Then if you're doing donation, cash donation, or you're doing charitable work you're doing,
Yeah.
those you can deduct. If you have medical expenses, that's over 7.5% of your income. If you have gambling losses, you can deduct up to the gambling winnings.
Wow, I didn't know that. Okay, that's cool.
I'm not encouraging you to gamble, but if you have
I mean,
gamble,
yeah,
you can
but
take a loss up to the
It's
winnings.
good to know. You know, it's good to know. Okay.
So that's where it comes to, because when
Yeah.
it comes to itemized deduction, there's tons of deduction you can take out.
Yeah.
Let's say if I'm filing single, I can take only 15,000, and if I have a property and I'm paying a property tax, right there, I get a $30,000 boost, which is more than standard. I'll go with the itemized deduction. So that means I reduce my taxable income.
Wow.
Is that deduction like for a property, right? Do you get multiple based on multiple properties?
You can get it on your primary and your second home, not on the rental. Rental's into a rental income deduction. You can take it out as an expense against your rental income. But if you have a primary resident and your vacation home or second home, those two things you can take out on a state and local tax, up to 40,000.
So for people in our community,
Correct.
people who are, let's say some of them are W-2 workers, other are, 1099, and then, they're living in their home, what's best for them? Standard deductions or itemized?
If you're living in a rental house and you're paying rent, most of the time, it all depends. But
Yeah.
if your medical expenses are not more than 7.5% of your income, and you did not pay enough state and local, which is more than your standard, automatically you're gonna go with standard. That's why when you ask me, Mustaque, how
Yeah.
do you onboard your client? When I'm going through your tax filing,
Yeah.
that what's in your taxes, you're getting the explanation, what is standard deduction, what is itemized, why am I choosing this over that?
Yeah.
Because just because I said that Nazi, you take standard and he takes itemized, why do you have to go with it? You need to see that does it actually make sense? So you compare side by side, this is what I get on the standard, if I itemize this is what I get. Which one gives you more deduction? The one that gives more deduction, you're allowed to take that to reduce your taxable income.
I see.
The more you lower your taxable income, the less tax liability you have. Which means if you paid enough taxes, more refund you're getting.
That's a very important point that you mentioned, where you're not only helping your clients, but you're also educating them and explaining the difference. I think that is what sets any professional service provider apart from anyone else's. A lot of people will listen to you and learn what your objective or goal is with your taxes and then do it for you, but who is really taking the time to explain why one decision is better than the other? And that's what's going to help inform that tax strategy going forward for next year. You know, I know to look out for X or Y. So I think on that note with deductions, right, a common idea or a common thing is that businesses get more deductions, right? So what's your take on filing as a business versus as an individual? And can you talk more about that?
Can we link those somehow? I don't know taxes. I just threw that out there.
Sure, great thing. I'm just going to piggyback to what we started last time.
Yeah.
A couple of questions back, you asked me, what are the things you're going to say to reduce the tax? That ties up to your small businesses.
Oh, okay.
If I have a W-2 and I have a small business owners, you have to understand, small business owner gets the good deduction that a W-2 income holders don't get it. Now you might say, what does that mean? When I get an income, I pay my taxes. After that, I pay my expenses, right? So let's say you made $100,000 this year. You paid $20,000 in taxes. Now from $80,000, you're paying your household expenses.
Yes.
Correct?
Yes.
But let's say he's a business owner. He makes the same $100,000. He's gonna cover all his business expenses first, and whatever is left over from that, he's gonna pay his taxes.
So you're paying less.
You're paying less if you know how to work around your business.
Yeah.
So let's say you have a business, you have a single member LLC, just to keep it simple.
Yeah.
I can deduct my meal expenses. I can deduct my travel. If I have a vehicle that I'm using for business, I can deduct the insurance. I can deduct the gas.
Haircuts?
I can deduct haircuts. If I need that for my business, yes, you can. If you're gonna do shopping, if you need to buy clothes that you need specifically for your business and you cannot use it outside of the business, then yes, you could deduct that.
Interesting.
Any type of legal expenses you have, any type of office supplies, if you have a contractor that you pay a 1099, those are deductions. So after deducting all those expenses, if I have a profit, I pay taxes. If I don't have a profit, I have a loss. That loss carries over to my W-2. You have a $100,000 W-2. I also have a loss from a business of 20,000. 100 minus 20. Now my taxable income is 80,000.
So that's a lot of game.
Yo, hold on. If you're watching this at home, rewind this. Rewind what he just said and truly understand what he said.
Yes.
If you are a business owner and the income that you make, you are not taxed on the income yet until after you go through all your deductions, all your expenses.
Correct.
And then after that, let's say you made $0, right? If you made $0 on paper,
no taxes will be paid.
No taxes.
Correct.
You're not paying any taxes on your business. But something that really struck me is if you take a loss on your business, you know, let's say you took a $50,000 loss because of all the expenses that you wrote off, right? Now it carries on to your personal taxes.
Agree.
Where if you made $100,000 in income personally, now $50,000 of that is gonna get cut because you had to put it into your business.
Correct.
So now for your personal, you're actually paying $50,000.
Correct, that's your taxable income now. Now from that 50, we're gonna take our standard deduction or itemized.
Yeah.
And now that's our taxable income. Figure out what tax bracket we're in, whether we have to pay taxes or we're getting money back.
Wow.
See? So just because you have a business or you have a W-2, not necessarily it's a done deal. There's so many things could be done. Like if you work from home, you can take a home office deduction. Your mortgage could be part of the deduction for the business. If you're living in a rental, part of your rent could be deducted as a home office expense because you work from home. Because your business is home-based.
So bro, everybody got to open up an LLC right now.
Your rent,
right
lights,
now.
everything is deductible.
Yeah, this is the information that your average everyday tax preparer is not going to know.
What? This is so important. Okay, a lot of the things that we're talking about here, it might sound like high level, but you're saying this is really surface level. Everyone should know this. Like these resources are available.
If you have a business, you need to know what are the things I'm allowed to deduct from my income. Because if you do not know, you're just missing out on a lot of deduction that could help you to expand your business.
I see.
Right.
Let's say, for example, under the one big beautiful bill,
Yeah.
let's say you buy a vehicle this year in 2025. Let's say you buy a Mercedes GLS, okay? It costs you with everything, let's say all in 100,000.
Sure.
You made 200,000 this year.
Yeah.
And the car that I bought, it's entirely for the business. I have two options. I can deduct the entire 100,000 as an expense from my business, or I can depreciate over 5 years. Whether you finance or bought all cash, it's up to you. But I deduct the entire 100,000 minus all my other losses. So now I have a loss on paper. I have my car,
Yeah.
plus I have a losses, but I still have the money in my bank account. My business account is still growing, while on taxes, I'm minus on paper.
Wait, hold on.
It's all legit way of deducting taxes.
Okay. Now this might be a stretch,
Go ahead.
but now is there a way you can get your car, not pay taxes, and is there a way you can get some money back? Like, is that even a thing?
You're not gonna get the money back what you
Yeah.
paid for the car, but
Yeah.
you recovered that money from your income as a deduction.
From your personal income,
From your
basically.
personal or even for the business.
Even if you don't buy it outright.
No,
Even
yeah.
if you don't buy it,
You could finance
Yo,
it, but
you're
if you lease
crazy.
it, you can only deduct the lease payment. But if you're
see.
financing it
I
or you're buying
see.
it all cash, under the one big beautiful bill, I can take 100% deduction this year, or I can deduct it over 5 years, which is 20% each, depending on what makes sense, because every person is different. Let's say you might say, okay, Mustaque, this year I made good money, but next year I'm planning to make more money, so I don't want to take the entire 100% this year. What if I'm going to need it? So let's stretch it out over 5 years, and 20% each will take it up. But some people say, you know what? I don't know what's going to happen next year. Let's take the tax break that I need. Okay, let's take the 100% deduction this year. I made X amount minus the car, but make sure the car is over 6,000 pounds to get
Oh,
the
yeah,
full
okay.
100%
Yeah.
deduction.
Okay.
So that's why I give an example of the GLS.
Yeah.
Whether you buy a GLS or you buy, let's say, BMW X Series, X5 or X7.
Yeah.
Those are the ones, or let's say in Lexus, there are multiple. Just make sure it's over 6,000 pounds. That's why you're going to see most of the business owners, you see the G-Wagon. That's where the G-Wagon comes into play.
That's why all these business owners
Have
right?
G-Wagons.
They got G-Wagons, all these luxury cars, because it's just they're driving a tax write-off.
That's a
You
tax write-off.
sneaky bastards. Wow.
Question.
I need one.
Let's say a business owner
What?
gets a $100,000 vehicle that's over 6,000 pounds, and they put zero down on it. They don't even cash it out, right? They take the full deduction in that same year. What if they like sell or get rid of the vehicle in the
No, you can't. Because if you do it, they're going to recapture those deductions they gave you. Because remember, normally you could deduct it over 5 years. But under the one big beautiful bill, they're allowing you to accelerate and take it in the first year. So if you want to sell it, you got to wait 5 years, let the regular timeline go by, and then you can sell it if you want. Otherwise, they can come back and recapture all the deduction they gave you.
So basically, when
You're
when-
stuck with it,
You're
basically.
stuck with it for 5 years.
Yeah.
But honestly, like that's that's not a bad trade-off though.
Some people like a lease, some people want to buy it.
Yeah.
You have answers to all of them.
Wait,
If
you can do the
lease
same
it,
thing if you lease it?
If you
Same
lease it, you
strategy?
can deduct the lease payment. Full lease
Okay,
payment.
okay.
Your monthly payment is $1,000.
Yeah, yeah.
12,000 for the year. 12,000 gets taken off from your total income, minus 12,000, and everything else comes out.
Wow. What is the biggest mistake that self-employed people make when it comes to taxes?
The biggest mistake self-employed people is that they tend to stay away from creating a business entity. Now, what do I mean by that?
Yeah.
Let's say I have a business and I decided I don't want to open up an LLC. I just want to run the business under my name, my same personal bank account. If I get audited, how do you differentiate which is your business and which is your personal expenses?
Right, that's true.
Because your bank statement or your credit card statement doesn't say that's business or that's my personal.
Yeah.
So that's when the line comes in that IRS tends to audit those people that who business, but they have no separate entity, no separate bank account, no separate credit card. So I tend to tell them that, look, regardless of any business that you do, open up a simple LLC, could be a one-member LLC if it's a solo individual. Open up a separate bank account, business credit card. All expenses out of the credit card, all income comes into business account. It's clean and more transparent.
I see.
And then once your business goes over, let's say net of 50,000, we transfer it to an S corp. That's where we're moving from high school to a community college.
Wow.
And from S corp, we can go to C corp, go to university. So you're going from Macomb to Wayne State now.
Oh, so C Corp is the next one.
C corp is a university.
I see.
I like that analogy.
Yeah.
It breaks it down.
That's so
You're in
cool.
Michigan, so I gotta give you an example that fits with Michigan, right?
Bro, this is a lot of great information. How can people start preparing for taxes? How can they start prepping for a strategy? Like, what's the first step? Because no one's gonna be able to watch this video and then be like, oh, he said I can get a Mercedes and I can write it off and then I'm gonna do that this year. It just doesn't work like that. So like, what are the actionable steps that our people can start taking right now?
Okay.
Right now, so that they can get to this point.
I'll tell you what you need to do right now, because your tax season is gonna start from January 26th.
Yeah.
Make sure you get all your ducks online. Now, what do I mean by that? Anywhere you worked last year,
Yeah.
it doesn't matter how many jobs you have, make sure you have all the W-2s, all the 1099s. If you have a checking, savings CD, you're supposed to get a 1099 from there. If you have a student loan, you'll get a 1099 from that. If you had an investment and you sold something, you'll have a 1099 for that. If you have a rental property, make sure you line up all the expenses that you have, any type of repairs you did, what type of income came in. Make sure I know what my income came in. Is it through 1099? Is it through credit card, or it's a cash transaction? That you could do immediately. So when you go, whoever you go to, I'm not saying don't go to tax preparer. I'm not saying come only to enroll agent. I'm saying whoever you go to, make sure you have your ducks on the line, so at least he or she knows what they're working. That's immediate what you need to do.
Okay.
Second thing you need to do, find out who can handle your tax situation for 2026, because the year just started.
Yeah.
Do I need a CPA or do I need an enroll agent? Do I need someone who's just gonna do my taxes, or I need someone who's gonna do everything that's under the sun comes with the taxes or financial planning?
Yes.
Schedule an appointment, do a consultation with them. If you don't get it during the tax season, get it after the tax season, get it in the books, so you know what I need to do for 2026, so you don't repeat the mistake what you had last year, because we all make the resolution that, you know what, January 1st, we're gonna go to the gym, we're gonna lose pound. I make it, I'm not losing weight, I'm gaining weight, so my resolution is not working. But when it comes to money, I think I'm doing good, but the physical part is not working. So that's something I gotta learn from Naji, but these are the things you need to make sure you have it done.
I think that's very important. Preparation.
Preparation.
Right? It's like right now, it's tax season. 2025 is done.
Done.
Know? We're just supposed to have our paperwork together, give it to our guy to take care of.
Correct.
Right now, we're actually supposed to be working on 2026.
Correct.
Right? So we might be behind a year. So you know what? Let me speak for myself for a second. I'm terrible at bookkeeping. I'm terrible at keeping all my ducks in a row. So for people like me, would you agree that a business or a person without bookkeeping is a liability?
It depends what type of business you're running, what type of formation of business you have,
Okay.
whether it's an LLC, it's an
Yeah.
S Corp or C Corp.
How can we do better when it comes to bookkeeping? What's like an easy strategy for me and the audience to follow, so that, you know, when next year comes around, we don't have to scramble for paperwork or things, you know, we're gonna be more organized?
When it comes to bookkeeping, it all depends like how big is your business. If it's
Okay.
a one-man show and you don't have enough expenses or enough bookkeeping to do, you could just go online, get it to QuickBooks. It's easy. For a small to medium size, you can easily get it done to
Yeah.
QuickBooks. Until you get to the point you have multiple employees, let's say you have 15, 20, 30 employees, then you need someone dedicated,
Yeah.
whether in your office or outside resource you have, who does the bookkeeping for you. But till then, you could just go online, get it to QuickBooks, any of the software you get, makes life easier, and just do your bookkeeping for them. And same thing with the payroll. And the reason I said it's size on business, size of the business, if it's an LLC
Yeah.
and you're making less than 50,000 net profit,
Yep.
you don't need to run a payroll, because LLC can transfer the money from your LLC to your personal, and these are all withdrawal or draw anyways,
Okay.
because all gets reported to personal.
Yeah.
But when it comes to an S Corp, you have to run a payroll, because you cannot take money out of the S Corp. We're not running the payroll, because one is going to go as a W-2, and if you're taking over the W-2, it's going to go as a draw or owner's distribution. So that's why it gets a little tricky. You have to have a good payroll at that point.
Uh-oh. Okay.
In my circumstance, how do I know the salary?
Yeah.
It has to be reasonable salary. What it means by that, if you hire someone to do the same work what you do, what would you pay them as a salary?
I see.
Now people think, you know what, since it's my business, I want to keep my W-2 lower, I'm just going to pay myself 20,000 and I'll take everything on a K1 and I'll have a loss.
Yeah.
And just I'll take a loss on the tax return.
Yeah.
IRS is gonna say that, you know, you're the CEO of the company.
Yeah.
You have your janitor who's getting $25,000 salary,
Yeah.
but you as a CEO, you're taking 20,000.
Yeah.
You know what? Find the right
brought
spot.
up a very good point. My head is exploding with all this information. You know, taking losses on paper, we talked about that a lot tonight. How beneficial is that though? Let's be honest. Like every time you show on paper like your business is taking a loss or like you deduct so much of your income, right? Like what are the long-term effects? Like for example, let's say I'm a business owner and I want to get business credit, or I'm a W-2 income earner, but on my tax filing it shows that I have no income. How will I get a house? What are your thoughts on that?
On that, that's why you have to, every year could be different.
Right.
Every year is different. What you're trying to achieve for this year or the next year, it all depends on that. So if I'm planning to buy a house, I want to make sure for next 2 years, I have a good income, good taxable income, that when I go to a loan officer, I qualify for the mortgage. If I know ultimately I'm trying to expand my business, I don't want to have a paper loss just for the sake of having it.
Yeah.
Or if you have a legit expense, that's one thing. Because most of the time what I see when people comes to audit and they come to us, I'm looking to expenses that it's just out of the box, like doesn't even make sense. And why they did that? Because apparently their person say, you know what, you need to take a loss and just we're gonna put it and we'll deal with it. You don't deal with IRS the way it comes to, because IRS is gonna come knocking at your door when you know it doesn't make sense. And when the number is just flashing on their eyes, they're gonna say, okay, bring this document, let's see what it is. And sometimes you cannot win it because when you're just making the numbers, it just doesn't make sense.
Yeah.
Let's say, for example, when we talk about the car, you bought the car this year, like for $100,000.
Yeah.
Next year you buy another car, $100,000, where you have no staff, nothing. So you're saying you're running 2 cars, which you can as long as you have a valid reason for it. I'm not saying no to it, but make sure you have a valid reason that it justifies why I have 2 vehicles, high expensive, like high priced vehicle. So what I tell them, if you have a 100% deduction of vehicle, next one, get a lease. So you can deduct the lease, full payment. Don't have to take a deduction, take the deduction of the lease payment. Now it makes sense. Now you're not drawing attention to it, and that's all legal.
So basically, doing all these deductions and showing zero income and all the write-offs isn't always the best strategy for
Not always,
everyone.
depending on what we're trying to achieve.
Yeah.
If you know you need to buy a house, or you need to get a business credit, you're trying to expand your business, you want to make sure you have a solid number, solid bottom line that allows you to do what you're trying to do.
Then who can help with that? Like, let's say I have an idea, like, you know what, next year I do want to expand my business, but I'm not looking to buy a house anytime soon. Can I just come to you, tell you that, and based on that, like, you can give me a tax strategy that will help me out?
We can look into it and figure out what needs to be done, so we can get the deduction that we need. At the same time, we have enough income, or enough net income that allows us to get what we need to do. We have to come up with a balance, a sweet spot.
Okay. That's very important, man. Because I was about to write off everything. $0 to my name, get the biggest tax refund. You know what I mean? Okay, this is great. There's a lot of people out there saying they can get you the highest refund. I see it on Instagram all the time. How much of that is true? What are they talking about? Is that legit? What's going on?
You don't want to market yourself that you are the person you go and get a highest refund, because when you market the highest refund guaranteed, that means there's some shady things going on.
Ooh,
most
talk on
of
that.
the time.
What's the shadiness?
Now, I'll tell you what I have seen in my last 17 years, where you have seen tax files where the deductions are there, it's not valid, it does not even fit into the tax return. Let's say, for example, you have a rental property, you don't have a management company who manages your property, but you have a management fees of $20,000, and I just want to make you happy with the refund. All you need to know is just the bottom line, that am I getting a refund or I have to owe?
You're right.
And most of the time when people talk about refund, highest refund, they're talking about earned income credit, earned income tax credit. That's for the low income people. If you have a low income and you have a bigger family, there is a table that goes by what's your income, how many members you have in your family, and you can get certain refundable credit from the federal that gets your highest refund. I think the maximum you can get is 8,100 or something on the earned income tax credit if you have 3 or more kids. So if you have no kids, I think it's time to get some kids.
Bro, I also saw like they're paying you to have kids now, like 1,500 or 500 a month.
They're giving you $1,000
Okay.
for kids that are born, like from 2025. The government.
But they got to be born here?
They gotta be born in U.S.
Damn it.
correct. In that case, you get
I see.
$1,000 given from the government. They'll open up an account under the kid's name.
Really?
Government is gonna contribute $1,000. You as a parent can contribute. Your family members could contribute for the child.
Okay.
And let the money grow for the kid's future.
Oh, it's not like, I thought it was every month the government is going to send a check to
Thing
me.
in Detroit.
Oh, really?
In
Okay.
Detroit, the new mayor Sheffield announced, I think it's like per child, it's $1,500 plus $500 for 6 months.
Yeah, you have it
Detroit,
in
yeah.
Michigan, yes.
Yeah,
In
Michigan.
Michigan, you have it, and I think that's for the income range as well. If you're in a low income, that's where you're getting it, but it's not for everyone. But what I'm talking about from the federal,
Yeah.
that's coming for all the kids. Any kids born in U.S. in 2025 onwards, they'll get $1,000 given from the government.
Wow. Okay.
A one-time payment.
Okay.
And they open up an account for you. Government contributes $1,000. You as a parent can contribute. Grandparents can contribute. Uncle aunt can contribute. The maximum you can contribute every year is $5,000. And the money goes tax deferred. They can take out the money in future, retirement, or whenever they want to take it out.
What about me? I'm putting in that 5,000 every month. I can put that as a write-off for me?
Depending on what we're doing it. If you're doing a 529 plan, you could take a write-off on the state, but not on the federal. But this is not a 529, that's just a kid's account.
What?
See,
There's a lot of promotions going on to have babies. That's basically what it is.
They're changing every year. like I
Every tax
mentioned.
is changing.
Changing every year.
That's why I said, like, don't just follow what we have seen our parents, our grandparents
Yeah,
do it. Our times have changed. Our way of dealing with finance have changed. For our parents, they didn't have Facebook. Our grandparents didn't have social media, Instagrams and TikToks.
They had
What
the
we
newspaper.
They had the newspaper. Now, when is the last time you and I, we read the newspaper? We got everything on our fingertip.
Yeah, it's
Now,
true.
by the time our kids get to the point, they might have something else.
Yeah.
Those things get obsolete after one point. That's why you have to keep up with the new changes coming in. What new nuances are here for taxes, whether it's the tax planning, tax strategy. If I'm making over 300,000, what else I can do? What are the strategies that are there outside of what I spoke about? There are a lot of advanced strategy that's out there that most of our community have no idea. Because all we think is that you have money, get a property, and just rent it out. Which is, one way it's good, but you have to understand what we're doing. Like when we're talking about the rental, there are two types of rental that's out there. You have a short-term rental, you have a long-term rental.
Yes.
Short-term rental, that's your Airbnbs.
Okay.
Airbnbs, your guest is staying less than 7 days, that's a short-term rental.
Yeah.
In order for me to take the expense of the short-term rental, I need to spend at least 100 hours a year managing the property. If I do that, that becomes a business activity. That means any losses I have on that property, that's a dollar for dollar write-off for my other income, whether it's a W-2
Even the
everything.
depreciation,
everything. And that's the biggest expense on any property, on a rental. So on paper, you will gonna have losses,
Yeah.
and that loss will carry over to your W-2 as a
personal.
losses. Now you might say, okay, Mustaque, what about my parents does long-term rental?
Yeah, yeah.
What do we do? Good. In that case, as long the owner of the property spends at least 750 hours for the year managing the property, which is like, I would say give or take 14, 15 hours a week,
Yeah.
now it becomes a business activity. And that's called real estate professional. That doesn't mean you have to get a real estate license, but that's a real estate professional status you get that allows you to take all the deduction, reduce your taxable income, reduce your tax liability, which in turn gets you the refund or lower balance due than what you paid last year.
What?
So buying a property is not bad. It's good if you know how to manage
if you
it.
know how to manage it. I got a question for that. So let's say your primary residence is also your investment property. Here in Hamtramck, a lot of the residents have been building up, right? Adding another floor to their home. So right now, this year, I think a lot of people might come to you and say, hey, I have a rental property, but it's also my primary. I live upstairs, or I live downstairs, and I have tenants here. So how does that strategy help them?
It gets split into 50-50. One half
see.
of the mortgage is your personal expense, and the other half is your rental property. So any mortgage that you half of it goes towards the rental expense. Any utility that you paid as a landlord or your tenant paid, it comes out off of that. Depreciation gets divided into half because on your primary residence you don't get depreciation because you're living in it. So you take only half of the property as depreciate. That doesn't mean you lost everything. At least you got half of it.
Yeah. So then,
And you can still have a paper loss because depreciation is usually the bigger chunk of it.
so now we still have 50%, right? That's taxable. So now, what's the strategies that we can use to, to
Not
take care of
taxable
that?
because the first floor that you're living in, that's your house. You're not paying rent to yourself. You're just getting the rent from the second floor. So second floor, let's say you get $1,000 a month, which is $12,000 for the year.
Yeah.
So from that $12,000, I'm gonna deduct half of my mortgage. I'm gonna deduct half of my property tax. I'm gonna deduct half of the utility if I'm paying for the utility for the entire house. If I'm paying for the trash removal for the entire house, I'm deducting half of it. I'm depreciating the half of the property. Any type of landscaping, maintenance, half of the things are gonna come out. Any repairs I did on the tenant's floor, I get to deduct it. And then it might be a profit, might be a loss, depending on every year what you're doing.
And then now if you have a home business.
If you're living in your first floor and you have a home-based business, whatever square feet you're using for your business, percentage of that comes out. So let's say 1/3 of my house I'm using for my home-based business. So that 1/3 of my mortgage, even if it's my primary, I get to deduct it. 1/3 of the utility that I'm living in, I get to deduct it. If I'm having food and drinks while I'm working, that's a business deduction.
So now we just went from 100% to 50%.
50% on the top, and from one, I took another 1/3 depending on how much I'm using for my business.
I see.
So that's why you gotta open up to the person, let them know what's actually going on because you don't want them to assume, and you don't assume they know what's going on.
I got you. I'm so glad you brought that up. Let's talk about it, man. Let's talk about trust, okay? Because in order to open up to someone about your finances, right, you have to trust them, right? Why should people trust you?
Good question. Yes, I'm not from Michigan. I'll be very honest. I'm from New York. But I have a person who's in Michigan. Her name is Selena Khan. She handles my Michigan completely. She's my director of marketing. She's my director of communication. She has been in your community for the last 31 years, serving the community for the last 18 years.
Wow.
She's a well-known person in our community. She handles everything for me in Michigan. So even though you don't see me every day, but you have a trusted person who's here every day and night with you, helping the communities, and she's the one who handles everything. She's the one who makes me look nice, and I'm just the one who comes in a suit and just presents it, that's it. But she's the one who's doing the hard work, let's put it this way.
So who's the one coming up with these strategies, and who do we talk to for financial questions?
It's gonna go through me. You'll schedule a consultation with me. You speak with Selena. She will handle my calendar, any type of events or anything that I need to do in terms of marketing, communications, or community outreach. She does that. But consultations, everything comes to me, and you're dealing with me directly one-on-one when it comes to the situation, regardless whether it's tax or immigration.
I see.
So you're also serving multiple states. So you have multiple people like Selena.
Correct.
In different locations as well.
Right now, I have an office in New York, in Texas, Michigan, and I'm planning to open one in Pennsylvania. And I have a separate company that I also manage that I'm the owner of. It's called 42 Strategic Wealth. That company is geared towards the high income earner. Through that, we have an office in California, Illinois, Houston, and another office in New York. So it keeps us busy. We have to constantly, I'm traveling outside of the tax season. Because everyone's situation is different, everyone's tax rate is different. So as your income goes up, if you are a professional who have multiple practices, let's say if you're dealing with the doctors or you're dealing with a lawyer who has multiple practices in multiple states, There's so many things we need to do, so many strategies that's outside of that than just a basic 401k. Because if you make $1 million, what 24,000 is gonna do? That's not gonna even have a dent on your income.
Yeah, that's really
So that's when you need advanced strategy like oil and gas. That's when you need strategy like charitable deduction. You get deduction for solar energies. That gives you 4 or 5 times of what you contributed as a deduction.
Wow.
That's a lot.
That's a lot, yeah, and you're like a one-man army right now.
I'm trying my best.
Yeah, man, that's good. You touched on something when it comes, you were talking about the wealthy people, and then, that got my mind wandering a little bit. So when it comes to wealth, right? Transfer of wealth is very important. That is something that we don't really talk about in our community because number one, we're first generation, right? When you say transfer of wealth, what wealth are we transferring? You know what I mean? We're just transferring like trauma at this point. but no, I mean, now we're at a point where, hey, our parents have assets, right? They have pensions, 401ks, retirements, right? Where they're getting older. All this needs to get transferred to us somehow. So now talk about that. What's the best way to do that? I heard about capital gains and all the taxes that come with that. Like what is the best strategy that our parents can implement right now while they're alive so that they can do a seamless tax deferred or tax free transfer for their kids?
Good question. When it comes to transfer as asset, regardless of the generation that we're talking about, your biggest transfer most of the time is your house, your primary residence, your parents' house, or your ancestral property that we talk about. Let's say I bought a house 30 years ago. I bought the house for $100,000. Now my son is adult. He's starting his work, and I die. I have 2 ways of giving the property to my son. I can give it to my son while I'm alive. Now the value appreciates from 100 to 300,000, let's say for math purpose, so I have a gain of 200,000. If I give it to my son or I transfer the asset while I'm alive, my son gets a step-up basis of that, which means now he has to pay tax on the entire 200,000 as a gain. Right. And if it's a capital gain or long-term, which is more than 1 year, 20% of the 200,000 goes in taxes. So 40,000 is gone, even before he even uses the property.
Right.
Instead, you take another 5-6%. So the way you transfer your assets, especially your property, you don't give it to your son or your family or your kids while you're alive. You give it to them, let them inherit from you. So what it means is that now my $100,000 property is valued $300,000. I die today. My son gets a house in today's time. Today's value $300,000. His cost basis is $300,000. He sells it today. He gets it for $300,000. He sells it for $300,000. He has zero profit. That means zero taxes. And he got the asset full, clean and clear. No taxes to be paid.
Wow.
No property, no federal tax, no state tax.
How can a son inherit property, assets from their father?
You can do it through wills or trust. A simple will can do it. A simple trust can do it, depending on how many assets are we talking about. How big is your portfolio? That will decide, do I need a will or a trust? If it's just talking about, let's say 1 or 2 properties or a couple of bank accounts, we do it through will and it's good.
I see.
It all gets transferred, And when you talk about capital gain, outside of the property, there are capital gain when it comes to investments as well. There are 2 types of gains when it comes to capital gain. There's a short-term gain, there's a long-term gain.
Okay.
Now, what's called short-term gain? If I have any asset less than 12 months, that's considered short-term.
Okay.
Short-term, you get taxed in your original tax bracket or your current tax bracket.
Yeah.
If I'm on a 22%, you're going to pay 22% on the gain on the short-term. If it's a long-term, which means it's more than 1 year, it could go from 0 to 20%, depending on your income threshold. In some situation, I don't have to pay any taxes if I'm low income, but I have a capital gain, long-term capital gain, I can walk out with 0 taxes, or the maximum I can pay 20%. That could be on the stocks, bonds, cryptos, you name it.
I see.
So capital gain, don't just limit yourself into the property, it could go into other assets as well.
Really?
Because people are into Bitcoins nowadays, cryptocurrencies, everything. That gives you a 1099, so you have to make sure that is it a short term or a long term. Remember a couple of questions back, I talked about what are things you want to make sure your ducks on the line. That's another duck in the line. You want to make sure that if I'm selling any asset, any stocks, bonds, cryptocurrency, do I have the 1099? Do I know what was my cost basis or what was my purchase price? And when I bought it, when I'm selling it, is it part of my statement that I'm getting from the company?
Wow.
Because a day here and there makes a big difference. So one day could make it a short term, could be a long term.
Yeah.
Short term is a higher tax bracket, long term could be a lower tax bracket depending on where you fall into the threshold.
That means really keeping up with your paperwork is so important.
It is.
You know, like what you're doing right now, is going to affect you years from now, right? And if you don't keep track of the paperwork, then not only are you putting yourself in danger, but, the future generations.
Future generation. And plus, when it comes to tax return, it's not just about, also when it comes to immigration, you need to make sure your taxes are up to date. So for example, you're a sponsor for your parents, you're a sponsor for your siblings. On paper, you're showing you have no income whatsoever.
Yeah.
How are you going to support other person who's coming from abroad?
Oh, so if you keep showing like losses on your business and
Not, let's say your actual final tax return, your final taxable income. Let's say I made only $10,000 after all expenses.
Right.
My taxable income is $10,000.
And then
now you're a sponsor for your parents. This guy can't even. He lives on a $10,000 income. You're gonna bring your parents.
Yeah, you can't.
And I'm gonna take care of my parents. So that's why everything matters. That's why every year is different.
Wow.
Could be last year you are okay with the taxable income of 10,000, but this year or future you're gonna apply for your parents. You wanna make sure you have a decent income, and you're not taking expenses that you don't need to.
This is like a lot.
It's all interconnected of what you do.
Yeah.
It all connects together.
It all connects, but this is like. But this is too hard. I'm just gonna be honest. Listen, I know you guys are watching. I'm losing my mind. This is too hard. There are people like me in this world, right? Where he's probably like, oh, this is genius stuff. I'm gonna take this knowledge and I'm gonna have better finances. And then there's people like me. I'm just like, man, this is way too hard. I can't do this. What's the solution for me?
Call Selena.
All right. I like that.
Call Selena, make an appointment, and we'll take care of you.
All right, I like that. That's easy for me. I'm gonna do like a legal strategy rapid fire here for you.
Sure.
So, one write-off, people forget.
On a personal, the biggest write-off they forget, if you're itemizing it, now this year, what they're gonna forget is the SALT tax, state and local taxes. And also if you're doing any type of charitable donation, let's say you're donating to a mosque or synagogue or temple, people tend to forget that amount.
Yeah.
That could add up when you're itemizing it.
Yeah, okay. What about for a business?
For businesses, if it's a small business, people tend to forget the depreciation of the assets, what they're buying. Whether it's a car, or whether it's your furniture, your laptops, your fixtures in the office.
Yeah.
You get to depreciate that. People tend to forget that.
Wow, all right. So one write-off, people abuse personal and business.
People abuse, when it comes to individual side, they abuse the childcare expenses. They abuse a lot. And I'll tell you what it means. I'm working full time.
Yeah.
Let's say my wife doesn't work.
Okay.
My son lives with my wife. She takes care of my son like a good mother. But when it comes to taxes, you show that the grandmother takes care of my child, and I'm showing that I'm paying X amount to my mom, and I'm taking it as an expense to get the child and dependent care credit.
You can do that?
You could do that, but people are abusing it. In some cases, you don't even have anyone take care of the child. And that one gets red flagged a lot.
Okay.
The second thing gets red flagged when it comes to taking dependent. The only way you can take a dependent on a tax return if you're paying more than 50% of their support.
Oh, yeah.
Okay?
I know that.
If I'm not doing that and I'm taking you, let's say I'm living with you, you're not paying any of my expenses, but you take me as a dependent, that's a red flag.
Oh, I see.
So that it's not a write-off, but it's a dependent issue that always comes into question. That what's the relationship with the person? How old is the person? If you have a child who's over 17, if they're in college full-time, are they working? How much are they making? Am I giving more than 50% of their support? They're living with me.
So what parents do, especially in our community, right? Everyone lives together, right? Parents, son, daughter, whatever. Let's say they're all over 18, they're all working, living their lives, right? What parents do is they put everyone as their dependent. So is that good or bad for...
If your income as a child is under 15,000, and your parents are paying more than 50% of your support, then yes, you could be a dependent on your parents. But that doesn't mean you don't file your taxes. You need to file your taxes as a dependent. So whatever taxes you pay, you might get some of them back as a refund because your income is low.
Okay.
So what we do, another mistake is that just because I took my child as a dependent, we think, oh, he doesn't need to file taxes because I only took as a dependent.
Yeah.
But he has a W-2, he needs to file taxes. So at least he can get the refund.
Okay. Home office, is it legit or a myth?
It's legit.
Okay.
But it could get muddy if you don't know what to do and how to take a deduction.
I see. I like it. All right. Car write-offs.
I love it.
What's real?
I love it.
Yeah?
Especially for this year, 2025 under the One Big Beautiful Bill. If you have a vehicle that's over 6,000 pounds, you're using it more than 50% of the time for your business, take the deduction.
Wow.
So next year when I come in, hopefully I see Naji with the G-Wagon.
Bro, I totally hate G-Wagons, but you know, I think I'm gonna start shopping for
Something, yeah.
This is amazing, man. All right, so you know what? I have so many questions for you that we could be here all night, but you're a man that's busy, right? So I'm not gonna hold you for too long. You know, your tax return is your financial resume. It's your financial report card. You know, we talked about how a tax return could affect your loan approvals, your financing. There has to be a balancing act when it comes to everything. You just can't write off everything, use all the deductions, and it shows zero income every year and get a higher refund. It doesn't work, right? Because it could put you in a worse spot. Please let me know right now, and to the audience, what are some actionable items that they can do right now so that they can start working for a better financial report card?
I'll tell you, get all your tax documents, whether it's your W-2, 1099, your interest documents. If you have a property that you're paying mortgages, make sure the documents from the mortgage is there. If you have an investment, make sure those 1099s are there. If you have done any type of donations, make sure those receipts are there. If you have a business, make sure your expenses are all lined up, income expenses. I think those things will make your life much easier when it comes to filing your taxes, at least for this time. Obviously, you want to make sure that you're in a better situation when it comes to future tax year, but at least now, since the tax day is just about to start, make sure those are all there for you, regardless of who you go to.
You know, a lot of people rely on those $50 filers because, you know, there are people who have been part of the community or been doing their taxes for a while. And the biggest thing, they're cheaper. You know, what is your advice to them? Just give us pros and cons.
If you have a simple W-2, a simple 1 or 2 W-2s, and you don't have any deductions, or it's not complicated at all, and no properties, nothing, just a simple W-2, go to a tax preparer. There's nothing wrong with it. I'm not saying they're not helping the community. They make life easier for us in some senses. At the same time, they keep us busy as well. Why? Because let's say you go to a tax preparer, something goes wrong, you get to a tax audit, they come to me, so I'm getting business out of it. So I don't mind having more tax preparer in the market because I get more tax audits to attend. But for basic W-2s, yes, take advantage of the tax preparer. There's nothing wrong with it. And in terms of my rates, I don't talk about rates because it's all about customer relations, making sure what I can do for you, how I can make sure that you're in a better financial situation on a tax-wise. You understand the tax planning, the tax filing, what's going on. Because I think the rates are determined by what you bring to a table. You're not paying me just because I look nice. You're paying me because I can deliver what needs to be done.
I see.
Okay. When you talked about the vehicle, there's Toyota Camry, there's also G-Wagon. They both take you from point A to point B. But it's all about what you need.
Which one's right for you?
What's right for you.
You know, what's advice you would give families who want long-term financial stability?
For long-term financial stability, you want to make sure that first thing first, make sure you have 6 months of emergency funding, no matter what. Before you go to any investment, whether it's stocks, bonds, buying a property, make sure you have 6 months of reserve, that if anything goes wrong with my job or my business, I can support my family for next 6 months. That's one of the biggest dilemma I see
Yeah.
when it comes to investments or financial advice. Because I'm also a financial advisor. I have my Series 6, 7, 63, 66, 24.
Oh, really?
So when I'm doing a financial planning for them,
Yeah.
first thing I see, they have no savings whatsoever.
Yeah.
But they're dreaming that I'm gonna buy X, Y, and Z, I'm gonna buy Bitcoin, and tomorrow I'm gonna be the millionaire. And I'm gonna dump all my assets into what I have. And next thing you know, Bitcoin goes down, they're out on the street,
Yeah, they gotta.
right? So don't overstretch yourself. Make sure you have enough cushion of at least 6 months of savings. If you have a business, you wanna take the business to the next step, make sure you have 6 months of capital to run your business while trying to expand something else.
Okay.
Because just because I'm trying to expand, not necessarily I'll get the result immediately. It takes some ramp up time. Even when you want to open up a business, it needs a ramp up time. Make sure you think about all of this before you talk about long-term stability, because that determines whether it's going to be an actual long-term planning or it's just going to look good on paper now, but 2-3 months from now, we're back to square one with nothing whatsoever.
That's true. You know, you said that you're a financial advisor.
Correct.
How come you don't lead with that?
I do so many things. It just depends on who I'm talking to and actually what my customer needs.
Yeah. Okay.
With an
Okay.
IRS, I'm an IRS enroll agent.
Yeah.
With American Bar, I deal with the immigration, and when it comes
Yeah.
to financial planning, I'm a financial advisor. So
Yeah.
it keeps me busy throughout the year. So that's why
Yeah.
tax season is not the season that I'm always busy. I'm busy throughout the year.
Yeah.
So depending on client, what I'm dealing with, like say for example, when I'm dealing with the high earners, not just we're doing the tax strategies, sometimes I also take over the 401ks, the investments as a financial planner. So I'm balancing both sides of the spectrum.
Okay.
I know exactly what's going on in the financial planning. I know what I've suggested them on the investment side, and I
Yeah.
know how that's going to affect on the tax. I'm the one who does the drawing of the entire picture. I know every piece of the puzzle, what's going on.
Yeah. I see. You see the bigger picture.
I see the bigger picture. I know
Yeah.
what's going on in taxes.
Yeah.
You want to bring your kids or parents. I know how that's going to affect on your immigration. And I know if I'm doing an investment, how the overall picture changes all of a sudden.
Okay. I like
Yeah,
that.
that's amazing. Like a lot of people, a lot of youth probably are trying to figure out their career paths and what they want to do, but people don't know that you can do like it's challenging, but you can do multiple things
can.
and
Yeah, you can.
provide like a curated service like
You
you.
can.
Like, that's really how you get the most benefit of working with the professional.
And I try to keep it more like a family-based business because when you come to us, you're being treated as a family. You know it's
Yeah.
a one-stop shop for you.
Wow.
Whether I need a tax service, I need financial planning, or I have immigration need, it's all taken care of under one hub.
Nice.
And in my staffing, I have people who does real estate as well, commercial real estate, or leasing, financing, capital sourcing. So in that case, when you come to us, it's all under one roof.
Yeah.
So you don't have to look for outside brokers or anything. Why do I go to get this? If I need a trust, who do I go to? I have staffing on my thing.
Really? Okay. This is a one-stop finance shop. Yeah, I love that. I was actually going to ask you everything that we talked about here. How can a banker help you and your clients? Do you have a banker? Do you recommend a banker for clients where they can add value to what you're doing?
100%. A banker plays a critical role when it comes to financial planning because a banker is the gatekeeper when it comes to financial planning. He or she knows what's in your bank, what you have on checking, savings, CDs. If you have a banker who really looks out for you, they're going to tell you now it's the time that you need to sit with a financial advisor. Or now is the time you need to think outside of the CD, what are the things you can use to utilize and expand your portfolio. That's why time to time I always meet with the bankers. I sometimes do like a lunch and learn with the bankers just to educate them what's going on.
Wow.
Because once they know what's going on, they can educate their clients and tell them, look, these are the things you need to keep an eye on. That when someone has X amount of dollars sitting in the savings account for, let's say, for 2-3 years, the money is just sitting idle.
Yeah.
Why are you getting 0.00% when you can make something out of it? Go into real estate. Get into short-term rental, into long-term rental. Talk to the real estate people, talk to the loan officer and see what you can get out of it.
Yeah.
A banker is an actual gatekeeper when it comes to anything. He or she can guide you to the loan officer. He or she can guide you to the financial advisor. He or she can guide you to an actual tax person who can tell you what needs to be done. And even as a banker, I know what I need to do. Do I need a checking, savings, CDs, what to do, how to diversify their assets.
Yeah.
So yes, banker plays a critical role.
I like that. Bankers are really gatekeepers. That's crazy. I like it. Man, do you have any more questions for my guy right now?
And I think there's a lot of information, and
Yeah.
it was very helpful, and definitely such an important segment to this entire show. Right? I think one of the coolest aspects is just learning that there's so many different adjacent industries that all work together.
Yeah.
You know, and I think it's very important for the audience to see people and professionals like yourself doing what you're doing and building businesses and services and providing real value to the everyday person or business, because it gives them a representation that, hey, there's someone that looks like me or comes from a similar background that's doing these types of things. I think that's important for the youth and just the audience to see, because now they can see that and be inspired to maybe pursue a similar path. Maybe this person sees this and wants to become an enrolled agent or learn about how to become a CPA or a financial advisor. So, yeah, I mean, I think we would need way more segments to fully talk about every single thing that that was brought up here.
Everybody wants to be a doctor, a lawyer, an engineer, but what they all have in common is they make money and they will spend that money, right? And they all have to pay taxes. So at the end of the day, if you're not going to become a financial professional yourself, you need to start getting educated on these things. If you don't have the time, this is why professionals like Mustaque and CPAs, enroll agents, bankers, they are here because they specialize in finances, right? If our finances are not up to par, if we don't grow our finances and have a way to share the generational wealth, we're not going to develop, all right? So when Bengalis take money seriously, we move smarter, we build faster, and protect the next generation. Thank you so much for watching. Mr. Mustaque Choudhury, how can people find you? Where are you? How do we contact you?
In Michigan, I have an office in Conan Street. I'll give my number. It's 347-416-3295. Plus, you can also reach out to Selena Khan. You go into our social media page. You'll have all the contact information there. She's a very well-known person in our community. I'm yet to find someone who has no idea who Selena is. So it's just a go-to person, but you have my number as well. Feel free to call me, schedule a consultation. I'm always open to answer any questions you have regarding finance, tax, immigration, just a call away from you.
Okay. And we got my brother AJ here. You know, AJ, COO of Metis Media. He knows everything about media, all right? And he's a financial professional. He's in commercial real estate. He does business development. There's a lot of businesses that I see that need development. How can they find you, sir?
You can find me at either Made in Banglatown or Detroit DOS on Instagram. I'm available on all socials.
I hope this was very educational. This was very transformative for me. I can't wait to get started on my taxes. Once again, if you didn't understand a lot of the things that we talked about here today, that's the point. If you don't know, that means you've been doing your taxes wrong, and that's okay. The next step is educating yourself or getting help from financial professionals. You can find him on his website. You can call him. And if you need help with understanding the jargon, you need a translator. Well, he has representatives here in Michigan that will help you get started, okay? I'm Naji, I'm Made in Banglatown. See you during the next episode.